Hello, I'm Tara Weber. Welcome to Market Call. Today on the show we have Kim Bolton. He's the president and portfolio manager with Black Swan Dexteritas. He's going to be taking your questions this hour on technology stocks. So get those questions in. That phone number, 1-855-326-6266. And you can also send an email to marketcall@bnmbloomberg.ca. Welcome to the show, Kim.
Thanks, Tara. Nice to be with you.
You as well. So I guess let's start off with talking about this volatility we've been seeing. How do you see this playing out in the short term?
Well, I guess we're going to have a lot of volatility in the short and the medium term. You know, over so far this year, the S&P has actually crossed the 200-day moving average 5 times on the upside and 6 times on the downside. So you really can't fault investors for the indecision with the uncertainty out there concerning, you know, the economy and the geopolitical situation. But, you know, the impact of the Federal Reserve on the markets right now really ranks just as high as the geopolitical and the economic consequences. You know, all of this creates that uncertainty, and not only for investors, but you're starting to see it in the business decisions coming from enterprises that, you know, they're putting on hold because they're not sure of the direction, right?
What kind of decisions are you seeing being put on hold?
Well, you know, we follow the spend particularly in the technology arena. You know, the spend coming from enterprises and the technology services and products out there. And we follow that through the data, particularly coming from Gartner research. And you can see that people are putting some of their business decisions on hold, particularly on the software as a service. You know, cybersecurity is still very, very strong. The hardware is holding up. Certainly the semiconductor is holding up. But the software side has got a little bit soft because people are hesitant about spending money.
Yeah, and fair enough, I suppose, right now. And I guess as investors turn to you and they say, where should I put my money? What sort of things are you advising them?
Well, the volatility can actually be your friend, so you can actually trade around that. But, you know, we run investment portfolios and separately managed accounts that are more geared toward an investment strategy. But we find ourselves actually doing a little bit more trading because the volatility offers the opportunities out there. Certainly in our fund, which is technology focused, you know, when I look at the fund, we're about 25% in the semis through the equipment suppliers and the designers and the manufacturers and so on. We're about 25% spread across the internet software, somewhat the software as a service. And then, you know, the rest of it is sort of scattered amongst well, actually, now that I think about it, there's about 20% devoted toward the cybersecurity side, which has been very good for us this year. But then the rest of it is sort of spread amongst fintech, e-commerce type sectors.
Oh, okay, that's really interesting. Actually, we had some calls yesterday on cybersecurity. Maybe we'll get some more today. So, of course, let's get those calls coming in. That phone number, 1-855-326-6266, and the email marketcall@bnmbloomberg.ca. Our guest today, Kim Bolton with Black Swan Dexteritas. Welcome back to Market Call. Today on the show we have Kim Bolton with Black Swan Dexteritas. He's taking your questions today on technology stocks. And Kim, I have an email here for you right away. This is from Susan. She says, my question for Kim, I hold Taiwan Semiconductor as part of my portfolio, but it has been relatively flat over the past year until going down recently. Given the war on Ukraine and the relationship between China and Russia, I'm wondering if I should shift my investment to Agilent or ASML. What are your thoughts on the potential for growth and stability?
Well, thank you, Susan, for the question. We own Taiwan Semiconductor Manufacturing Company, um, and we actually own it for the long term. This isn't sort of a short-term trade, because well, first of all, they are the undisputed market leader in the semiconductor foundry side. Susan mentioned Agilent and also ASML. They're more on the equipment supplier side versus the foundry, and the foundries are the ones that actually do the manufacturing of the chips. Usually coming from the designers being like an AMD or a NVIDIA. You know, TSMC, Taiwan Semiconductor, maintains its foundry market leadership. They own 51% market share of chip production out there. And they do it really in their advanced process technologies, but also their huge economies of scale. And there's a big moat that goes around Taiwan Semiconductor, and particularly in the foundry side, that it's very, very capital intensive. So it's difficult for other companies to actually break in. Capital intensive, they announced earlier this year, well, late last year, that they were going to spend $100 billion in the next 3 years on capital expenditures. And so, their technology, innovation, and also the economies of scale give them a great advantage out there. Currently trading about 99. So although it's come down. Now, Susan is probably thinking, when I listen to the question, the relationship between China and Russia, there's all this chatter that, China may, as a result of Russia moving into Ukraine, that China may actually take a run at Taiwan. We really don't think that's going to happen. A lot of the mainland Chinese population have family over in Taiwan, so it would not be a good idea to actually attack family members over there. So we have currently trading just under $100. We have a 12-month price target of 151, so it's got a good long runway. But this is something that has the potential over the next 3, 4, 5 years. Thanks for the question, Susan.
Yeah, sounds like hang on, Susan. Okay, next up we have another email. This is from Monty, and he says, buy or sell Absolute Software. Do you think it's cheap?
I like this company. We follow it. We don't own it. This is a Vancouver-based, cloud-based software type company that specializes in management and security of computing devices and applications and data. It's a very, very competitive field. And I'll tell you the main reason that we don't own it is the price action just is not very good. Absolute. It has good revenue growth. Mind you, in the last quarter, the revenue is actually a little bit lower, but they're not profitable. And in these days where you have valuation compression and growth stocks certainly that are unprofitable, are unfashionable. So we just don't own it now. Buy it down here around $10, you could probably, if you could pick it up here and then down at like $9.50 and then maybe $9 and use an $8.75 stop, it might be a good trade.
Okay, let's get to the phone lines now. Next up, we have Al in Montreal. Go ahead, Al, with your question for Kim.
Yeah, thank you very much, Kim, for taking my call. I'd like to ask Kim his opinion on PayPal. I bought some stock less than a year ago, and now it's down more than half. I wonder if you see any future for the stock, which is not my pal anymore. Thank you.
I think that was Tim. Was that right?
It was Al.
Oh, sorry. Thanks, Al. I can feel your pain. We still have a very, very small position. You know, we had a little less than one, and we've got probably a little less than half of 1% left in it. You know, there's a lot going on in the payment processing space, and you can see it through the likes of PayPal and Square, and certainly with Visa and MasterCard and so on. And there's this new thing out there, real-time. It's called real-time rails, and it's just a way. There are companies, particularly coming out of Europe, and they're starting to migrate over here, that are finding cheaper and faster ways of actually doing payments. And so PayPal has just got a heck of a lot of competition. It is a leader out there, but it's disappointed. So we have a very, very small position in here, and we have a $165 12-month price target on PayPal.
Oh, so you're starting to distance from your pal as well.
Yeah.
All right. That, of course, is Kim Bolton. He's president and portfolio manager with Black Swan Dexteritas. He's taking your questions this entire hour on technology stocks. So keep those questions coming in. That phone number, 1-855-326-6266. And you can send an email to marketcall@bnnbloomberg.ca. Welcome back to Market Call. Kim Bolton is on the show today, president and portfolio manager with Black Swan Dexteritas, taking your questions on technology stocks. And we're going to head back to the phone lines now, and we have Teraver in Phoenix, Arizona. Go ahead, Teraver.
Thank you. Mr. Bolton, my question is on Lam Research. They do equipment for semiconductor, the wafer fabrication. Now, here's the question nobody can seem to answer. The semiconductor market is cyclical, and right now the price to earnings ratio for Lam is less than 15, but I'm scared, is it part of the downdraft on the cyclical? Can you please help us understand? Thank you.
Okay. Great question, Teraver. From Phoenix. So Lam Research is an equipment supplier within that whole semiconductor ecosystem. So you have the designers, you have the manufacturers, the foundries, and then you have the equipment suppliers that are selling the equipment and services over into the foundries and the manufacturers. Manufacturers example would be like a Micron or a foundry like Taiwan Semiconductor. So Lam very much competes with the like of somewhat ASML, and then also with Applied Materials. We sort of, you can almost do sort of Teraver pairs trading, but the one that we particularly like in this space right now is Applied Materials, but also ASML, because ASML, they're the ones that are the lithography equipment suppliers out there, especially over into Intel. But you know, Lam is a big supplier into Taiwan Semiconductor, and you really, and Teraver, you talked about the cyclicality of the semiconductor industry. The runway still seems to be going out well into 2023. Now, the semiconductor industry is like a big tanker, and it takes a long time to sort of turn it. But you know, there is a heck of a lot more demand out there than supply, and so the equipment suppliers, they have their orders going out well beyond 1.5 to 2 years. So I hope that helps in describing it there, Teraver.
Yeah, Trevor always asks some really great questions. Let's go to Nick in Montreal for our next question. Nick, what's your question for Kim?
Good afternoon, Tara and Kim. Thank you for taking my call. My question is on Palantir. I'd just like to know your feedback for investors that want to hold this for the long term, because it's got promising technology. So I'll just hang up and listen to your feedback. Thank you. Bye.
Thanks, Nick. Great questions. They're all good questions. So Palantir is very much the poster child when it comes to artificial intelligence. But it's certainly had its problems since its offering. Currently trading right now just around 12.5 to $13. We have a 12-month price target of $16, which has come down considerably. So I'll just talk a little bit about the company and then sort of the price action that's going on with Palantir. So it provides two sort of data analytic platforms, the Gotham and the Foundry. Now the Gotham side is more skewed toward government contracts, which is over half of their customers out there, and then the Foundry is more toward the enterprise side. You know, the total addressable market, according to Gartner Research, for artificial intelligence data analytic platforms is about $120 billion. So it's nice to be the leader in there. But they're very, very skewed towards a lot of these government contracts. You know, 60% of their revenue comes from the top 20 clients. 20% of the revenue comes from 3 clients. And you know, those big clients are the likes of the Pentagon and the Department of Defense and so on, down in the States. And they have everything sort of sitting in the cloud. Now, one of the problems in the price action of Palantir is that there was a lot of shares that actually came up on the market from previous, the founders and employees, and it very much skewed. So, it used to trade up in the 20s, got all the way up to $29.50 if you go back about a year and a half ago. And then, this flood of shares into the market has really sort of driven down the stock. But, you always look for the leader. And Palantir is a good stock to own for the long term. Because it's a leader in the data analytics platforms and artificial intelligence. Thanks for the question.
Yeah, and some big customers, as you noted as well.
Yeah.
All right, well, you're going to want to stick around. Of course, we have Kim Bolton, and his past picks are coming up right after the break. Welcome back to Market Call. Kim Bolton has been on the show today, and now it's time for his past picks. So Kim, first up here, you have VMware. At the time, you had it at a price of $162.33. Now it's $108.71. So the total return on this name came in at a loss of about 16%. So a bit of a bumpy ride on this one.
Well, when you look at it, thanks, Tara. When you look at it over the course of the year, thank goodness we didn't hold on to it. We actually traded out of it. And what we did is that, so VMware used to be a business unit of Dell, the big PC manufacturer. And then they spun it out because VMware is really on the software solutions in areas of modern applications and cloud management and infrastructure and networking and security and so on. But it's more on the software as a service side. And so they spun it out. Its software is sort of agnostic, so they can actually, through Kubernetes, that they can actually attach themselves, the software, into any of the cloud players out there of AWS and Azure and IBM and Alibaba and Oracle and so on. We did own it. We traded out of it right after they spun it out from Dell up at around 175. And that's actually our price target right now. Our 12-month price target on it is 175. Now, I own it, but we don't own it in any of the separately managed accounts or in the fund. But, you know, right here at around $111, $112, you know, you could buy it here, you could buy it, well, 108, sorry, buy it down at 105 and then down at 100 with a stop down at sort of 92, 93. And it has a decent runway going forward with a 12-month price target of 175.
Okay. Next up, we have Salesforce. At the time, $218.05, now $186.10. So we're seeing a loss on this one of about 15%. What happened with this name?
So I actually own it, and it's a smaller position that we've sort of traded around over the course of the year, and it's worked out. You know, we always look for leadership in particular technology sectors in that whole technology arena, and Salesforce, without a doubt, is a leader when it comes to you know, its service offerings, going all the way to helping customer relationship management, and it's just the king daddy out there, all the way from, you know, analytics through delivering quotes and contracts and even invoices, but it's also got into marketing offerings and even commerce offerings out there. But you know, there are a lot of moving parts. Particularly the supply chain side has impacted them. There's been a lot of new entrants into it, and you know, there is that fear of a bit of an economic slowdown coming. So these are all sort of headwinds that are coming into it. But it's nice to have a position within that whole CRM space. So, you know, right now trading at $188. We have a 12-month price target of $287. So it has a nice runway in front of it.
And it would be nice to have had a position in this last one you suggested. This is Palo Alto. At the time, $337.44, now $611.90. So total return coming in on this one, 81%. So this, this company here on the NASDAQ.
Yeah. So Palo Alto, they're in the cybersecurity side, and you know, a lot of your audience and listeners will know the cybersecurity side with the likes of, you know, a CrowdStrike and a CyberArk and a Cloudflare, and you know, all during the pandemic. There is a great demand, especially from large enterprises that would piece together, you know, the firewall side, but also the internal and the recognition and all the security bells and whistles that large companies would like. Now, and we owned all of them. We still owned Fortinet and CrowdStrike, but Palo Alto is a really interesting one. Because now that it's sort of going down into the, you know, medium-sized and smaller companies that are recognizing that they need to, you know, beef up their security side, instead of actually trying to piece together different companies and different services and software, a lot of them end up going to Palo Alto because they have the full suite. They have the a firewall side, they have the security in line, they have the threat intelligence and the data loss prevention. So they can actually bring the whole suite to those small and medium-sized companies, and they've really done extremely well. It's a great story. Now, but we've actually taken profit on it. we have a 12-month price target of 643, and this has done extremely well for us. We actually let it go around 630. So
a good name to hold on to, or maybe get into.
Yeah.
That, of course. Let's get some more calls in, though, right after this break. That's Kim Bolton with Black Swan Dexteritas. Keep those questions coming in on technology stocks. That phone number, 1-855-326-6266, and we'll see you after the break. If you missed any of today's show, or you simply want to listen to Market Call on the go, then we have some good news for you. Now you can catch Market Call in podcast form on iHeartRadio. That's where you'll get all the top picks, past picks, and all other stocks that are mentioned on today's show. But now, of course, let's get back to Kim Bolton of Black Swan Dexteritas. He's been taking your questions today on technology stocks, and we have Murray in Thornhill, Ontario on the line. Go ahead, Murray.
Hi, Tara. Thank you very much. Hi, Kim. How are you? I'm calling about a company called Google, you may have heard of, and I was wondering what are the growth factors and what are the potential headwinds? And I had an additional question, which is the old strategy, which is sell in May and go away and possibly come back in November. And being that you have this expertise, I'd like to hear about your philosophy on that as well. Thank you.
Thanks, Murray. Great question. So, Google. We've been running our fund now for 9.5 years, and we've always had Google. We've always had Microsoft, Amazon, Google. We've sort of traded in and out of Apple and so on. So, Google just has all the cylinders for. It has the Google services, it has a Google Cloud, it has the other bets, and the other bets are actually starting to come to fruition. But when you look at Google, and I was just thinking about Murray when he asked about the headwinds, I guess the headwinds would be if we do end up going into an economic downturn and heaven forbid a recession. I don't think we will. But Google it's around 81% of their revenues come from advertising, coming out of their search engine. And so if people start to hold back on the advertising, that's going to significantly hurt Google. Right now, trading, just shy of 2,600. Murray, we have a 12-month price target of 3,300. And I just wanted to spend a little bit of time and just talking about your sell in May and go away and come back in September. So I don't think so. The market this year has dramatically changed. If you go back over the secular bull market the last 10 years, it was an investment market, and now it's becoming more of a trading market. We do have investments in our portfolio, but we end up trading around those investments a lot more to actually make some money. The other thing that we do is we have a hedge that we put on top of of our single stocks. So we have stock portfolios if it's either in the fund or in the separately managed accounts, but then we put an overlay of short equity indices on top of that. It's worked out very, very well this year because we have a lot of unrealized gains done on our hedge, and we have unrealized losses on our stocks. However, the runway for those stocks is extending further and further and further. So in answer to your question, going in to the summer months, I think there is going to be a great opportunity when some of the geopolitical side becomes resolved. Also, there's more clarity with respect to how many interest rate hikes that are going to be coming down the pipe from the central banks. And once there is more clarity on those two subjects, the economic rebound will come and growth stocks will be back in favor. And so going into the summer months, we will hold on to our stock portfolio, but for us, the summer months will be an opportunity to actually take our profit out of that hedge and let the stock portfolio going into the fall and Q4 actually run. So I hope that helps, Murray, and I hope it made sense.
It did make sense. That's actually a really good insight. Hopefully all these things start to die down and that can happen. Let's squeeze in one more in this block. We have Ken from Kitchener. Ken, what's your question for Kim?
Good afternoon, Kim. My question is in regards to Constellation Software. I'd like your thoughts on it going forward. I hold a very small position in it, and I'm looking to add to more to a software company. I presently hold Microsoft and have had it for some years and done incredibly well. And I don't know if what your recommendations might be as to adding more to either Constellation or if you have a better pick in mind. And I'd like your thoughts going forward. Thank you.
Thanks, Ken. Well, I have lots of good ideas, but one of them, yes, is Constellation Software. We've had the great fortune of actually getting into Constellation Software when you've had a few of these swoons so far this year, and you rarely get a chance to get into a great company like Constellation Software, which is just a fantastic poster child for the Canadian technology arena. So what Constellation does, as you know, Ken, but for the rest of the audience, is that they acquire software companies, but they do it in a vertical strategy. So they buy software companies that are geared towards specific industries and businesses out there, be it maybe into the agricultural or into the manufacturing or into the healthcare side. And then they use the scale of that to actually go out and touch those verticals in those various industries. And the team over at Constellation has just done a fabulous job. They have a return on invested capital of 32% over the last 10 years. Currently, Ken, it's trading around 22.60 to 62. We have a 12-month price target of $2,665. So it's got a nice runway going forward, and this should be in people's portfolios. And okay. Even in these swoons that you've had, it hasn't come down that much. But it's a great opportunity.
Okay, that's what people like to hear. That, of course, is Kim Bolton, President and Portfolio Manager with Black Swan Dexteritas. Stick with us. We have more questions coming up after the break. Welcome back to Market Call. We have Kim Bolton of Black Swan Dexteritas taking your questions on technology stocks. And heading back to the phone lines now, we have Basile from St. Laurent. Go ahead.
Hi, thanks for taking my call. You just spoke about Constellation Software, and my question is about Enghouse Systems, which I understand is kind of in a similar type of business. The stock is way off its 52-week high. I think it's come down like 60%, but they're still sitting on a lot of cash, and there's talk about a special dividend or something. Wondering what your thoughts are on Enghouse. Thank you very much.
Thanks, Vasant. So we follow it, we don't own it. You can only own so many. Currently trading around $36.50. Vasant, it's actually got a decent runway going forward we have a 12-month price target of $59.50. So it is on a smaller scale, somewhat similar to Constellation. It develops enterprise-level software solutions. It was very, very popular, during as employees were moving from their offices to their homes, and it very much specialized in that remote work, the visual computing, the telecommunications side of it. And then they bought a company called Video, and they were in the right place at the right time, particularly when it comes to the telemedicine side. So yes, it's come down. It's got a decent runway ahead of it there, Vassal.
All right, let's go to Am from Ottawa with a question. What's your question, Am?
Hi, Kim. So I always look forward to your guest appearance because you focus on tech, which is my area. My thinking is that the digital transformation infrastructure stocks such as data centers, G5 towers, electrification, cybersecurity, etc., will need to grow to meet future demand along with infrastructure such as roads, bridges, schools, etc. I'd like to get your opinion on how will rising rates affect these digital infrastructure stocks, and maybe your thoughts and recommendations for stocks and ETFs to play this long-term infrastructure trend. Thanks, and look forward to your answer.
Yikes. They asked me to keep it short, and that was a mouthful. So I'll try to keep it short. It's all about data, who owns the data. Whoever owns the data is the king. And so on the infrastructure side, you go with the big guys, certainly with interest rates going up, but here we are. You got the 10-year Treasury at over 290. Who would have thought? A lot of people thought it might get up to 2.5, but not upwards of 3%. And I think as we go into this earnings season, next couple of earnings season, you'll see these big mega cap profitable companies in the technology arena actually maintain their growth levels of in the teens and the 20s, and even you can pick out some of those software as a service stocks that are involved in the infrastructure side, like for example a communication platform as a service company like a Twilio, which is really sort of the Amazon AWS of the communication side of actually allowing various softwares to talk amongst themselves in the cloud. But I would definitely stick with the profitable companies, because if the interest rates continue to go up to battle against the inflation, there is going to be a compression on the valuation. And right now you're seeing difficult comps against the old pandemic side. So stick with the profitable companies on the data infrastructure side.
Some good advice. Okay, we're going to have to leave it there. That, of course, is Kim Bolton, President and Portfolio Manager, Black Swan Dexteritas. Stick with us. His top picks are coming up right after the break.
Welcome back to Market Call. I'm John Ehrlichman on the Bloomberg Market Set. We're getting ready for our program at the top of the hour in the markets today, and I know a lot of viewers have had calls about technology stocks. Seeing a nice rebound for those hard-hit tech names. We'll walk you through the scorecard for stocks. And what about the outlook for housing? Today, we saw a pretty optimistic view from Royal LePage. Hard to keep those prices down in their opinion, but then BMO poured some cold water on that. We're going to get some perspective from Tony Stilo of Oxford Economics on where home prices go from here. We'll talk housing, and we'll get back to that tech stock story that's playing out on Wall Street and Bay Street as well, coming up at the top of the hour. Tara, back over to you.
Thanks so much, John. Of course, we have the perfect person on the show to talk about those tech stocks, and now it's time for his top picks. So Kim Bolton of Black Swan Dexteritas, your first pick here is a name I actually noticed you dodged from a question earlier, Microsoft. Why did you choose this name?
Thanks, Tara. Well, as I mentioned before, there are a number of mega cap tech stocks that we own, and for the past 10 years that we've been managing the fund, and so this is one of them, Microsoft. We pared back back and forth, but you know, it's got so many horses in the race. It has that annuity of Azure, which is their cloud offering. And you know, the three of them out there are AWS and Azure and Google. And you also have Alibaba and Oracle. But you know, Microsoft is excellent in actually cross-selling from its Azure over into its productivity and business lines like Office and Exchange and Microsoft Teams and Office 365. So, and then they have the whole sort of intelligent cloud segment, which is involves even things like GitHub that they bought. But then they're just working through their acquisition of Activision Blizzard, which should actually close later this year. And that's, you know, it's a $70 billion ticket that they're actually spending on that. That will put them in as the world's third largest gaming company by revenue, behind Tencent, the Chinese company, and Japan's Sony Group. So this puts another horse in their stable. So, you know, you can buy it here around 280 to 285. We have a 12-month price target at 365, and if it goes down lower, I would add to it, down, you know, all the way down to 250.
Lots of horses in that stable. Let's talk about another name you have here for a top pick, and it's another big name really that people recognize, Adobe. Why did you choose this one?
Well, this is one of those software as a service type companies, but you got to love a company that actually has a verb as one of its business lines, so Photoshop. So it's a one-stop shop for product design and content creation, marketing, and they're just the leader in that. You know, they bought Magneto back in 2018, and gave them entrance into the e-commerce side of it. Gartner Research actually has them as their #1 pick on the digital commerce side. So it's currently trading, and it's up, you know, 2.5% today at $435. We have a 12-month price target at $650. This is a great one.
Okay, and your last one here, Qualcomm as well. This is another name many will recognize. What's behind your choice on this one?
Yeah, you know, everyone talks about the designers and the manufacturers in the semiconductor space. Well, here's Qualcomm, and they're really the king of the central processing units and very competitive in the graphic processing units. And their intellectual property and their chips and software, it's all related toward the wireless technology, which you can see actually leads to its leadership in the 5G as they start to roll it out around the world. It has a number of segments or business units that they're running. One that is geared toward the 5G. Another one has its intellectual property, and then it has its design side of it. So on that, currently trading at about 140, and we have a 12-month price target at $214.
Okay, so some big names there. Thanks, of course, to Kim Bolton. He's president and portfolio manager with Black Swan Dexteritas. He's been with us this entire hour, taking your questions on technology stocks. So thanks so much to Kim. And before we let you go, let's take a quick look at the markets today. And they're all moving very well. They're all in positive territory. We're seeing the Dow up quite considerably there, 418 points on the board, so up more than 1%. In fact, all of them are up more than 1%. But take a look at the NASDAQ, 1.8% at this moment. And it's really obviously a day where tech stocks are doing quite well. We're seeing that as well when we think about the TSX. So just looking at that one, we're also in positive territory. I have us up about 103 points. Let's see, what 95 points here. You know, some of the biggest names that are putting some of those points on the board would be Shopify. There we're seeing an additional 29 points being added on after what has been a pretty rough couple of days there. But really, information technology is the big gainer today, followed by healthcare and consumer discretionary. On the other side of things, where we are seeing some of the weight is in energy and materials, and they have been doing very well as of late. Not so much today. That's where we're seeing the most points coming off the board. Some of those names, Nutrien, Agnico Eagle, Barrick Gold, you know, Tourmaline. We're thinking about natural gas and oil prices. There we're seeing a bit of a slide as well. Price of WTI down to $102 a barrel today, so down about 5%. And when we think about natural gas at the Henry Hub, we're down at about $7 per million British thermal units. So that's a bit of a drop from the $8 where we were yesterday. But of course, yesterday was at 13-year highs. So a slight pullback is what we're seeing. Now with that, let's turn it over to John Ehrlichman and Bloomberg Markets. Thank you so much for watching.